What is up, everyone? Welcome to the new episode of the Passive Income Attorney Podcast. Thanks for joining in on the fun. When you have a moment, go check out escapethebillable.com and snag our free passive investing guide. It's absolutely free. Most of the time, when we think of the Bay Area or San Francisco or Silicon Valley, we think about big tech, stocks, startups, things like that. Well, our guest of honor today works in big tech in Silicon Valley, but instead of rolling with his colleagues by investing in stocks and startups, he actually uses his active W-2 income to invest in commercial real estate. Alex Kholodenko has over 10 years of real estate investing experience and has spent over 20 years in the high-tech software industry in the Bay Area as an IT professional. He is the managing general partner of Wealthy Mind Investments, a firm specializing in helping busy professionals invest in tax-efficient real estate funds. All right, let's get started.
This is the Passive Income Attorney Podcast, where you'll discover the secrets and strategies of the ultra-wealthy on how they build streams of passive income to give them the freedom we all want. Attorney Seth Bradley will help you end the cycle of trading your time for money so you can make money while you sleep. Start living the good life on your own terms. Now, here's your host, Seth Bradley.
Mr. Kholodenko, how's it going, man?
Outstanding. Hello from Silicon Valley.
Awesome, man. Happy to have you on.
Thank you for having me.
Of course. Tell us a little bit about your background, your story, man.
Yeah, thank you. Thank you for the opportunity. I appreciate that. So my background is I was born in Ukraine. I'm an immigrant, a first generation immigrant, and I came to United States more than 25 years ago. And ever since then, I have lived in the area. Don't ask me why. My aunt, my uncle, that is, picked up one of the most expensive places to live, and we have immigrated with my parents. And since then, I have met my wife. I have two children, two boys, age 12 and 18, and always been in Silicon Valley. I love living here. My background is in tech. I've been working for startups and larger corporations, including Fortune 500 companies such as Capital One, Wells Fargo, a lot of financial background, and always been kind of fascinated with financial services, and worked for a mortgage company at one point. That's where I learned all the underwriting rules, even during fun times in subprime days with zero down payments, and started the real estate investing kind of journey as a side business more than 10 years ago. Just like most people, I did single family homes for a while, tried to crack that code to certain degree, certain failures, certain successes, built homes, flipped homes, did some joint ventures, lended money, went to auctions, bought some live auctions, a home, including land. And ultimately, nothing seemed to stick for a while until I realized that I needed to buy more time. As a busy professional, I have a demanding job, a demanding business, not only business, but life in general. There's so many things to do, right? Including, interest. And that's where I found the syndication model was very good for somebody who is a busy professional.
Sure.
And never looked back. I mean, started investing passively. Luckily for me, I had some stock portfolio that I built over time that I had to kind of reposition and tried that to prove the model, whether it worked, and made six-figure income in that. And last year, I launched my own company together with my business partner called Wealthy Mind. I'm a big wealth and mindset believer that in order to accumulate wealth, you have to start thinking about wealth and act like wealth, a person, right? And now I'm helping other people to invest when we find good deals together with my business partner, in specifically multifamily.
Awesome, man. At what point in your career did you kind of have that aha moment? Was it in the middle of a crappy flip that you're like, hey, I've had enough of this. I've got to find another way. And then you found syndications, or
Yeah, I think it was a combination of different things. I mean, I got excited about real estate for a long time ago. I don't know whether many listeners of yours are, getting excited about watching, flippers show on TV. So I always
Right.
had in the back of my mind, man, if these guys can do it, why can I? I'm a smart guy.
Right.
I can figure it out. But at one point I realized, you know what? I suck at construction. I don't understand a lot of these moving parts. And, I have used and formed good relationship with other people where I have used partnerships and joint ventures to a certain degree, but some of them did flop. In fact, I partnered up with one guy who is a professional flipper. That's what he does for a living. And we did build a brand new home. He purchased a lot, and then it took about a year and a half, just way over budget, way over time. I brought a buddy of mine together as a third joint venture person, and we funded the entire project with him. And we were like, man, when are we going to get out? How long is this going to last? And how much can we, at the minimum, can we lose? Because, the projections were super high. We started lowering the price. It was about 2 hours away from Seattle. I mean, the location was not super great, but it's still okay in a smaller town where there was, we built one of the best houses in the neighborhood, right? That's mistake number one, right? You never want to have the best house that are out there. I mean, there were some bigger homes, but ours was one of the biggest, one of the fanciest, one of that. So that didn't work out. And, to me, I think that was the sticking point. And I said, you know what? I'm not a flipper. I don't want to be a flipper. But there's got to be a different model out there. So I started looking around, for something bigger, more scalable, and more passive. I'm a big believer in, invest, forget about it, create systems, and just buy time. Because there's so many other things that I want to do besides working. I love travel, like many people do, right? And that's where I was Googling, searching, exploring different options, talked to a lot of people, went to a few conferences, and something said, what, this makes sense, right? Mm-hmm. Where you're buying something bigger, more scalable, where you are passive investors. And then over time, that's how I evolved, right? I was passive in many, many deals. I have invested in probably close to 50 deals. Some of them were smaller investments through crowdfunding platforms. So I didn't invest, hundreds of thousands of dollars into each deal, right? But I tried that model and it seemed to work. Some of them I did lose money. Not every deal went full cycle according to projections, but over time, I did cash out really well on multiple deals that over-delivered perform. I mean, as you know, real estate has been doing really well, at least the last 5 years, right? So I like I said, I've proven the model to myself, and that's where I decided to launch my own firm, where I'm an active syndicator as well as passive.
Yeah. And I mean, real estate, it's on a spectrum, right? I mean, it depends on how much time you have. If you're a busy W-2 professional and you have a really high demanding job, it's going to be really difficult to flip full time or even flip on the side or wholesale or anything transactional like that. And then somewhere in the middle, in the middle, you might have, buy and holds, you might have, turnkey investments, but you're not going to see the returns you necessarily want to see. And on the other side, on the really passive side, you have the syndications where you're really just betting the sponsors and the market and the deal up front. And then after that, it's completely passive.
Very true. I mean, at one point, the goal for everybody, I'm sure, is to accumulate enough assets that you can be totally passive, right? But until you get to the threshold of a few $1 million, I mean, you got to bust your butt to get where you want to go, right? And I think a lot of people also estimate the effort that involves. I mean, you talk to everybody out there, most people are either curious or interested or want to be in real estate, but it's a grind, man, as you know.
Right.
I mean, it takes a lot of time, building relationships, studying the markets, understanding the numbers. There's a lot of moving parts. And I would say, I think it's very important to realize what your strengths and weaknesses are. I think a lot of times I was thinking that I know it all. I'm a Superman. And at one point I realized I'm not.
Yeah.
Like I said, I realized, what, construction is not my forte. I suck at construction. And it's okay. You just got to be honest to yourself and, let somebody else who is good at it, who is enjoying that, who has maybe architectural background or construction background. Because real estate, as we all know, it is a team sport. It's a team game.
Yeah. Leave it to the experts. I mean, everyone has their niche. Yeah. So
for sure.
Yeah. So why is the tech guy investing in real estate, man? Why was your 401k not enough? I mean, for most people, they're just like, let's plug as much money into that. Let's invest in
Yeah.
stocks and bonds. Why was that not enough for you?
Yeah, so I still have exposure to the stock market as well. But at one point, I started to kind of study what successful people do, what ultra wealthy, uber wealthy people do. And, there was a common denominator, which is certain holdings were real estate related. I mean, it is very difficult to create passive income that is tax efficient with 1031 exchanges, with deferrals through the stocks. And real estate does allow you to do that. So if you'd like to have a cash flow sort of lifestyle, it's hard to create that kind of income from the stock portfolio itself. And in fact, a lot of my friends are also starting to shift some of their portfolio because it's also a mindset, right? If you work in a technology space, like I'm in Silicon Valley, right? That's what we do. That's what we know. Right. My friends are Facebook, Apple, Google, small startups, and when it comes to syndication, apartment building, to them it is a foreign concept.
Yeah.
But slowly but surely, because a lot of these people are very analytical, they're into numbers. When you start to break things down to them and tell them, hey, you know what, I understand that Facebook and Google could grow, or potential other stocks could grow, but they could also stagnate, lose money. And it's hard to create those tax efficient passive income, but you just collect a check, right? So why don't you diversify? And that's what I started doing. I started to diversify and shift some of my portfolio from some volatile or some of the bonds or money markets that were not producing much into more growing cash flowing assets with an equity upside, because ultimately we're all looking for 15 to 20% annual returns, which is doable if you do your due diligence on an operator and find the right deal in the growing market, right?
For sure. That's hard to find, even if you invest in just like an index fund or something like that. We're going to get a wide brush of the market. It's really impossible to do it. You can't really beat the market. So if you want those kinds of returns, you need to look at real estate and you need to look at alternative assets.
Very true.
Yeah. And you're definitely going against the grain of a lot of your colleagues.
Yeah, no, but it's funny that you say that, but I think over time perception does change. Yep. Some of my friends are still kind of on the lookout, like, what is this guy doing? I still don't understand real estate syndication, buying as a group, but slowly but surely people do come around. I have some friends that are more curious. They're open up to at least an opportunity to educate themselves, because you're not going to invest if you don't understand what it is, right? Mm-hmm. So the step one would be to at least explore, does this make sense? And for some people, it might not be the right choice, which is okay.
Yeah, for sure. So, after you started investing passively, how did you find that first deal? And, what are some tips maybe to find that first deal or to vet those sponsors?
Sure. So my first deal, because I'm analytical engineer kind of tech guy, was online. So I started investing through crowdfunding platforms. Back in the day, there were many, and there still are. So that's how I got started. In fact, one of them went out of business altogether, called Realty Shares. This was a very large venture capital funding. I think they raised close to $50-60 million. And some of the deals I'm still holding, believe it or not, where I invested more than 5 years ago. And some of them I did cashed out well, they beat the performance. Some of them underperformed. Some of them I lost money. I'll be totally transparent with you. And I actually met the CEO in one of the networking events. Very young guy, cool guy. He said that we just over leveraged the company. They just hired too many people. They grew too soon, too quick. And in a nutshell, looking back, what would I have done differently? I mean, at one point I educated myself. And I said, paralysis analysis, I have some money to invest. Okay, let's shift from stock market to real estate. And I just dived in, right? Could I have done more research, talk to more people, analyze more deals? Probably. But, in retrospect, sometimes you just need to, pull the trigger. And at the end of the day, it's still a risk, man. As you know, there is no guarantees. If you want to have a guarantee, then it's FDIC insured savings account that earns 0.5%. Talk to a few advisors or more experienced investors. Make sure that you talk to somebody who has a track record, who has experience in what you want to invest to, because as we know, real estate has so many different niches, right? So don't talk to syndication to a flipper. Does this make sense? Talk to somebody who's been investing in a space that you want to invest, right? Ask them, how to evaluate the deal. And I'm a big believer in going to networking events. I know it's difficult now because of COVID, but there's so many Zoom calls, networking business mixers online. Facebook is exploded, LinkedIn is exploding. Just reach out. There's a lot of people out there that are more than willing to help you and share the knowledge.
Yeah, for sure. Now, what's the difference between investing in a crowdfunding platform versus just directly investing in a real estate syndication deal?
Yeah, so the biggest difference, there is no personal touch, right? So for example, there is an 800 line, you call them, nobody picks up the phone. And they might call you back 3 days later when you're not available, they'll send you an email. So when you actually syndicating with somebody that you actually know, or you hopefully you know that person, you trust and you like, because most likely you're not going to invest with anybody that you don't like nor trust, right? I mean, that's how it works. And just make sure you ask some of the toughest questions that are out there. That you gotta be absolutely 100% sure and positive that that you have all the answers that you need, because we're not talking about small change, right? The typical investments are 50 to 100, sometimes even more, right? So if you don't feel like that person is answering the question, that person is not genuine. That person might not have the answers, but is not getting back to you, like responsiveness, for example. If somebody promises to you to get back to you and they're not doing that, that should send you the wrong message. Just be careful. Probably not a good idea to continue explore investing with them. And ultimately, you got to understand the basic and the fundamentals, right? We're not talking about maybe reading PPM from A to Z, but nobody has time for that, nor desire, nor expertise. That's what lawyers are for.
I'm a lawyer. I should say that you should read the PPM, every word of it.
From A to B,
every single word of it.
Right? Yeah. But what I'm trying to say is, understand the business plan, understand the market, understand the projections, understand the risk involved with that, as well as, hopefully you vet out the operator that has a track record, right?
Yep. For sure. Are there any differences in, let's say, the return profiles of the fees between, the crowdfunding?
They're pretty much the same, 70-30, 80-20. I mean, here and there are some, different hurdles, things like that. But, sometimes crowdfunding platforms are adding more fees because there's a marketing fee associated with, white labeling and putting the deal together. But end of the day, there's some good deals sometime out there. Will they perform? It's hard to say. It's hard to say. What I can tell you is that in my case, I ended up being a sponsor in one of the deals that I did invested through crowdfunding platform. So this could happen. So this is kind of a backdoor entry if you want to be an active investor. A lot of people are rushing to be an active investor, right? So, and the good analogy is that, you got to date a little bit. You're not going to get married and becoming a partner, a true partner with somebody without getting to know each other, right? So in my case, what happened was I did invest on a couple of deals with the sponsor as a passive investor. And I kept in touch with those guys through updates that they were sending me. And at one point I said, you know what, I like the company. This is what I do. I'm raising capital and helping with deal analysis, because you cannot just raise capital. Right? I can help you with maybe some asset management, some marketing, investor relationship, you name it. Just give me a shot. And guess what happened? After a while, I was given that opportunity because I had that relationship. They knew me. I was an investor with them.
Yep. Yeah, for sure. I mean, I've heard it time and time again. everyone always says, if you're interested in being an active syndicator or an active person in commercial real estate, you should start off passively. I mean, invest in a deal, see how it goes, learn the ropes, network, and then see if you like it. Because you may end up just like enjoy being a passive investor and enjoying that cash flow. And you're like, oh, well, look, I'll just plug in 50K or 100K or 150K every year. And then before you know it, you're going to replace that active income and you're going to be good to go.
And then you're also building your own track record, because guess what's going to happen if you start raising capital? People are going to ask you, how many deals have you invested? Mm-hmm. What are you going to say?
Yep.
I have not invested. This is my first deal. You know what? I'd rather wait and see how the deal performs. And then why don't I talk to you 6 months from now, right?
Right.
That's what I've been telling a lot of people. I mean, we have a booklet, or sometimes people call it investor pitch deck, right? So you got to create the track record for yourself. Mm-hmm. And once you do that, it's a lot easier to raise capital or to talk about, potential deals, joint ventures, because if you have some track record, people are going to be very receptive to talk to you, and they'll be taking you more seriously.
Yep, for sure. So now that you've kind of graduated into active investing, how are you able to balance your full-time W-2 career with that, as well as continuing to invest passively?
Yeah, it's a challenge. I'm not going to sugarcoat. In fact, people say life balance, all of that. I think there's such a fine line. I think I was reading about what book? Never Eat Alone. I don't remember the guy name. And then he was talking about the story of one politician. I don't remember the name either. But he said that, if you really want to achieve greatness, man, you got to bust your butt for a long time. And meaning that, 5 a.m., sometimes waking up, working, 10, 12, sometimes 20 hours. So I have a day job, right? Mm-hmm. And then some of the activities I do either during lunch, before my job, after, weekends. I mean, it takes time to build the brand, to build the company, to build the track record, to build recognition. I wish there was a shortcut, but again, if you want to achieve something amazing, you got to put sweat into it and long hours. Now, what's interesting about real estate business, it has a lot of flexibility, right? So I could take off and do nothing for 2 weeks and then pick up where I left off 2 weeks from now. Now we're at the point where we're kind of automating things a little bit more. We have some interns. We're looking at a digital agency as well. So a lot of these processes are going to be automated so that we're going to be starting to get out of the picture. But at least in the first year or so, you got to go full in, man. Yep. You got to go full in and work your tail off until you see some results.
Yeah, I mean, you've got to kind of figure it out. I mean, that first year or so, or even longer than that, I mean, you're doing a lot of the stuff yourself. Before you can even hire VAs or hire interns or hire anyone else, you got to know what you've got to get done first.
Yeah, exactly. Because, like right now we're training some of the interns on some of the email marketing, like we talked about it before the call, right? But if you don't know what needs to be done, how are you going to train that person, right?
Right.
And I'm not talking about, becoming an expert, but at least you got to have clarity to what you want them to do. And if you don't know what you want them to do or how to do it yourself, because you got to create instructions for them, right?
Yeah, for sure, man. So let's switch gears a little bit. What's the biggest investing mistake that you've made?
I think not understanding the team, the management team. So one of the deals I was foolish enough to invest where there was a single member. And that guy did not have a good experience. And I guess nobody else was there to tell him, maybe you're doing something wrong.
Yeah.
And that was one of the biggest losses of my investment. And right now, the lesson learned is I just don't invest nor partner up with any operators that are single member.
Yeah. Got to have a team around you, man.
Got to have it
by yourself.
For sure.
What about biggest investing success story?
Well, one of the biggest success stories was, I would say our first deal as an active investors, we actually did it during pandemic when it was just starting out. Nice. We were scared ourselves. we turned down the deal initially because we thought, the world is ending or something terrible is happening. But then we looked at ourselves. We personally liked the deal. And we've been building up, anticipation and have been talking to investors for 3 to 6 months, even before doing the first raise. And when we actually did decide to do that deal, and this was early March, by the way, like the stock market tanked.
Yeah.
30%, 40%. People were panicking. So people were looking for something more stable that produces cash flow, right?
Yeah.
And we just, decided to go full in. We hosted a webinar with our partners. We sent an email campaign, and we were blown away. I mean, we raised a significant amount of money in a very short period of time, and we never looked back. I think it gave us so much confidence.
Yeah.
Going forward, that you said, man, if we can do this during pandemic, what else is possible?
Right.
What else could we do, right? And that gave us a very good kick in the butt and the momentum for 2020. So we're finishing strong. We're finishing close to 5 million in raising capital for this year, and we're excited to double that number next year and shoot for more.
That's awesome, man. Congrats. I mean, that's when the world was really on hold. I mean, stock market was crashing, the sky was falling, and people were just like bracing because they had no idea what was happening. So that's incredible. Right. You're able to pull that off. Let's jump into the Freedom 4, man.
It's time for the Freedom 4.
So what's the best thing you do to keep your mind and body healthy?
I do yoga.
Cool.
I exercise. In fact, I did it today, and I just like the spiritual component, the physical component, and everything in between. Breathing. I have a very active mind, so it's hard for me to sometimes to slow down. But yoga does help me a lot to do that.
Nice. I like that. I just started doing that this year, so it's definitely relaxing and a different kind of a workout.
Sure.
Yep. In an alternative universe where you weren't involved in real estate, what would you be doing?
I love sports, man. If starting all over again, I would probably become a football player.
There you go. Nice. What's your team?
I was born in Ukraine, as I said earlier. So my home team, I'm actually sad today. They lost to Barcelona 4-0.
Oh, soccer, football.
Yeah, soccer. Yeah, soccer. Not American. I love football. I'm a 49er fan too, probably receiver because I run fast.
Yeah, nice.
But
nice.
My dream of growing up was to become a soccer player.
Very cool.
Forward.
Very cool. Where were you at 5 years ago, and where do you see yourself in your business 5 years from now?
Well, 5 years ago, I think I was, starting out. I started to see real estate kind of end of the tunnel sort of lights. There were some, it was kind of a tunnel, but there were small little lights here and there. So my journey, how I started was, remember I was telling you about the flipping experience. I took some time off. I went to Fiji for Tony Robbins event. And he sometimes holds these events in his resort, and he's got one in Fiji. He's not teaching that anymore, but he still has that resort available. And then my roommate was the real estate guy, the flipper guy, right?
Okay, yep.
And we became buddies. We still keep in touch with him. I'm going to be traveling to Florida, and I'm going to be seeing him. So we became instant friends because real estate was always something that I was passionate about. And then even though that didn't work out the way I planned, I decided, you know what, I'm going to stick with it. And that's how I ended up, with syndication model, because I always knew that there's going to be something in real estate that I will find a way how to make it work. And I really enjoy what I do. I mean, it gives me so much joy and happiness where I get on a call, I get to educate people, for such as even today, just sharing what I know, just openly, genuinely being yourself, sharing what I know, what didn't work and what worked, right? And inspiring people and helping them. So 5 years from now, I see myself that, my company is very successful. I help over 1,000 people together with my business partner, Ashish Sanan, busy professionals. That's our target audience, primarily middle-aged tech guys, men and women. We have some CPA, doctors, dentists, attorneys as well. And I just like to share my knowledge and help as many people as I can to become financially free through real estate, because ultimately real estate is a vehicle, right? We all want to be financially independent, free, and enjoy life, travel the world, but real estate is a true and proven way to build wealth, right? There's very few ways how you can create generational wealth through real estate. Now, you got to educate yourself, right? You got to take time and build the skill set. And that's what I'm doing on a daily basis. I'm continuously learning from a lot of other successful people, because there's a lot of people that are out there that doing exactly what we do, right? And we can learn from each other and help each other, because real estate is a fun team game as well.
Yeah, that's the beautiful thing about it. I mean, it's strange because real estate, most people that have like the secret sauce, they don't want to share it. But in real estate, it's a pretty open dialogue that you can have with other real estate investors.
Yeah, it is so true. Like I was on a call today, the guy is just brand new to commercial real estate, and he is busting his butt to find the deal. And I said, happy to help you and share any knowledge and links or resources that you have. And who knows, maybe tomorrow or 1 year from now, we become partners, right? Because it's all about helping each other and growing together.
For sure, man. So how has passive income made your life better?
It just gives me more opportunity to enjoy my life. I do enjoy traveling a lot. So being able to create these passive income streams, looking at your quarterly statements, like, oh, here it is, another $1,000, $2,000, $3,000 came in without doing much of it, right? You just do good due diligence on it, and that makes a lot of difference. Right now, my older son is in college, so he's out of state college student, so the bills are pretty expensive. He just earlier this year got into Purdue University, but we're in California, right? So college is expensive, right? Being able to supplement that income from my job with some of the real estate investments, makes a difference.
Yeah, for sure. Alex, thanks for coming on the show today, man. Where can people find out more about you?
Yeah, so you can go ahead and just contact me directly at alex@wealthymindinvestments.com. My company name, again, is wealthymindinvestments.com. Again, I'm a big believer in the wealthy mind. You cannot attract wealth without thinking like you're a wealthy person. And please email me. I have a lot of resources. I have a YouTube channel. I have free report that I can share with you. I'm more than happy and willing to connect offline as well. You can schedule a call on my website as well. And I'll be glad to connect with anybody who would like to learn more and get started, either actively or possibly investing in real estate.
Great. All right, brother. Thanks again.
Thank you so much, Seth, for having me. Have a great evening.
You too. All right. Alex always lights up a room. I love how he started using his W-2 income generated in big tech to invest passively in commercial real estate. Once he got his feet wet, he dove headfirst into active investing. That's the route I recommend and have heard time and time again from experts in the industry that that's the way to go. If you want to take your passive investing to the next level, I want to invite you all to go to escapethebillable.com and get our free copy of our brand new passive investing guide. It's absolutely free, and I know you'll find great value in it. Until next time, folks, enjoy the journey.
Thank you for listening to the Passive Income Attorney Podcast with Seth Bradley. Do you want more ideas on how to generate multiple streams of passive income? Then jump over to passiveincomeattorney.com for show notes and resources. Then apply for the private Facebook community by searching for the Passive Income Attorney on Facebook. And we'll see you on the next episode.